And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning and welcome to the Market Prep. Today is Thursday, January the 12th. My name is John Hoagland. Thanks for trusting me with your time. Our focus, no matter what the news is always on finding accurate context, good risk management, and remaining patient in our trading. 7:30 this morning. Markets popping already. The CPI numbers come out. Year over year in December, they were looking for 6.5 after last month. 7.1. It came out as expected, 6.5%. That is the slowest increase in prices, consumer prices, in 14 months from what I'm reading. The month over month, they were looking for 0%, came out down 0.1% after a positive 0.1%. It's the only one that not come out as expected of the four CPI numbers. I'm no expert at trying to decipher what these things mean. I'm going to focus on what the market is telling me today. It should be a very interesting Make Hoag Money today. By the way, here is the link to register for the Zoom meeting if you want to be able to speak or vote. Go to the Zoom meeting. Of course, you'll be able to watch it on YouTube as usual. The CPI number was not the only number that came out at 7:30. The jobless claims came out as well. The initial jobless claims last week were at 204,000. They were looking for 215,000, came out 205,000. So about 10,000 less initial jobless claims last week. Continuing jobless claims, they were looking for 1.7 million. It came out 1.634, so lower on both of those. It seems people may be either giving up or going back to work. Stocks were steady before the numbers came out. They're not too far from steady right now. Just a whole lot of rigmarole, stop running, ripping people up, reminding me yet again why I don't participate in volatile periods in the market. We've got all day to find good opportunities, and I'm not going to risk my whole opportunity today in a market that is very thin. If you watch the dome before those numbers come out, the S&Ps get down to single digits for bids and offers. There was a big gap to the downside after that number came out where there was, probably about, 8-10 points where it didn't even trade. The market just evaporates. How does anybody handle that? I don't know. Crude prices remain firm as increasing Chinese demand remains the focus for our crude traders. We're above that weekly kickoff level that we tested to yesterday. Going to be another interesting trading day in the crude oil market and gold as well. Gold pushing to the upside here after the CPI numbers. The major banking sector ushers in Q4 earnings season tomorrow. Tomorrow we have, United Health is one, but JP Morgan, Bank of America, Wells Fargo, Citigroup, Bank of New York, Mellon, Delta Airlines is due out tomorrow. Monday, we don't have a lot as far as earnings coming out, but then we resume the banking sector on Tuesday with Morgan Stanley, Goldman Sachs, a couple of the biggies there. So we are coming into earnings season. We'll have those to kind of focus on as well. The VIX this morning was set to open around 21.21, up a little bit. The dollar index has hit the skids. Boy, oh boy, we saw a big jump to the upside But now we're right back down below 103, 102.85. I'm seeing the last here at 102.79. We haven't seen these levels in about a year in the dollar index. We're also looking at the yield on the 10-year, which did get a nice spike, but returned right back to right about 3.5%. As always, I ask that you hit that lucky like button. Share, comment, question, feedback, heckling, and love are always welcome. Subscribe to our YouTube channel. You get notified when we do go live. Caprice 101 first in the room. You win the prize. Serenity Trader. Hola, Bob. Les. Fred Decker. Yeah, it's crazy, right? When these markets kind of get very illiquid and start whipping around like that. Alejandro, good morning. Bill Phillips, Terry King, JM, Tanya Armitage, good to see you. Serenity Trader Vince throwing up some wild charts. Yeah, that was quite the whipsaw this morning, wasn't it? Charles, good morning. George. You missed it right before we opened up. Lacey was up here moosing me. I thought maybe I could get her up here to say good morning to everyone, but she's now chilling, so I'll just let her be. Sean, good morning. Dr. VJ. Zach, good morning. Rusty Golfer, my spirit animal. Sarah Hall, as always, good morning and prayers and love to you as well. My brother Rick, the Randolph to my Mortimer. Love you, buddy. It's good to see you. Caesar, Jason, White House Andy, RCU. Dan Trader Phil, good morning, JT, and Rob T. Good to see everyone. So this and Make Hogue Money are going to be it for the day for me. We're going to have the podcast with Dan Hodgman and Jack Peltzer at the end of the day today. So today tomorrow will be the forecast only being Friday. This week seems to be flying by. I'm hoping that it has been wildly successful for you. We're going to jump into the charts right now because we do have Make Hogue Money right after the forecast. So let's take a look. Here's the E-mini S&Ps. This is the 30, just kind of showing the whipsaw that we had. But let's start with the longer context here. Market holding up above our weekly kickoff as we speak. Don't forget we had a late spike yesterday. The market settled right on the weekly kickoff level yesterday, 39.90. Over open interest, we were watching Delta negative all day yesterday. A pretty substantial increase in open interest of approximately 27,000 contracts indicates with that negative delta that potentially longer time frame traders adjusted inventory up towards that weekly kickoff level. Now what are they going to do? Are they going to continue to adjust inventory to the long side? We've got a decision to make up here. Are we going to accept above this important inflection level, or are we going to reject? CPI, anything can happen. We see this market looking like it's ready to open above the late spike. Here is the late spike. It'll probably be a little bit more obvious on the TPO charts, but there it is. The base of that late spike is 39.8475. Look at where the overnight held, the base of the late spike. Now we have a whipsaw information, which I kind of consider friendly to the market. If you didn't notice, I'm wearing my rally sweater. So I'm looking for this market to continue this move to the upside. And right now, if we were to open, we would be opening with a gap above a late spike. So there we have a similar situation to yesterday morning. We've got a late spike the day before. We opened with a gap. We couldn't close the gap. We continued to move higher to an important inflection level. We've got a gap. If we open above the gap and we have a gap and we can't close that gap, then the nuances will be saying likely to continue to the upside. Look at how negative the delta looks now. Negative delta all day yesterday as price continued to move higher indicates the potential of longer time frame buyers. Longer time frame buyers don't use market orders to get in. They use resting orders. They probably just put those orders in and move them up all day long and squeezed the short time frame until the very end of the day when the short time frame said, well, the heck with this, we're not going to get paid. We got to get out. And that's what brought us to this important inflection level. Again, if we can open above the late spike and we can't close this gap, I'm going to be looking for this market to continue this move to the upside. Here's the TPO chart, regular trading hour session only. No extreme for the IB yesterday. We did look lower and then we ended up resolving higher throughout the rest of the session. Tanya, that can be wildly successful if you don't lose money on a day that, you know, that to me is wildly successful, right? All right, so here's the profile from yesterday. Not huge excess at the low here, but we have the late spike. Here's the overnight low. That's where the market just whipsawed down to. Here's the overnight high, whipsawed to this. Excuse me. My most important nuance so far today is the fact that we're going to open up above the late spike. No matter what the CPI did, this is the visual that I'm going to kind of be using as my ruling reason until proven wrong. Where is it proven wrong? Well, if we start accepting below the base of the late spike or even back in value from yesterday. Okay? So, come to Make Coke Money. We're going to be watching the open, and I'm going to just sit there like I have no idea what to do, and you guys are going to tell me what to do. That sounds like fun to me. Take a look at crude oil now. Okay, it is in rollover. We know that, and the market is somewhat directional. This is probably driving the longer time frame crazy because they're working on getting a cheap roll instead of being directional. Overall, we added 22,000 contracts on this push, right up to weekly kickoff high, almost similar to the S&Ps, right? We just ended the day right on weekly kickoff high in the S&Ps, pretty close to it here in crude oil. Settlement in crude, however, was 77.41. So overall, adding 22,000 contracts in future months. The February contract lost 22,000 contracts. Now, these are, of course, estimates, so they're not precise, but they're going to be close. That means that the future months in crude oil on that push to the upside yesterday added 44,000 new contracts. Short time frame upside structure looks good, but it still remains in the channel that we're looking at as a potential bear flag. We're a long way from breaking out from the low there. So the weekly kickoff high I'm viewing as a pivotal level. This 50-session moving average up here has been resistant for the last 2 months. So this might be an interesting opportunity for us to watch and see if there's an execution available for us that we can limit risk against. Take a look at the 30. So here's that channel. We're right up to the upper end of it and right up against that 50-session moving average. Confluence. Is this an opportunity? We're not even really open here yet. We've got about a minute. But we went from low of the channel to high of the channel and, kind of holding up above and opening above an important inflection level with a gap. Well, overnight inventory is long. Gap rules. If we can't close the gap relatively early, we're looking for opportunities for longs, but I don't like it here. Because again, on that daily chart, we've got the 50 session, which has been resistant, and we are at this trend line. We may even watch the open on this. Here's the TPO chart. This doesn't include the overnight session. This is our overnight session here. So normal variation day, no initial balance extreme on this one either. The minute I start talking about that, it just stops. So here we go. We're in the first minute here. Let's take a look. This is the opening range trade. Opening range here. 79.09. We're looking at 25 ticks in the opening range here. We're going to come back and see how this played out. Let's take a look now at the NASDAQ. And I see Vince talking about the 200 session here on the continuation chart here for the S&Ps. We are now above. Now above. Now to the NASDAQ. So the NASDAQ is doing a really good job of trying to catch up to the S&Ps now, isn't it? Remember, our weekly kickoff level in the S&Ps is approximately just eyeballing on this chart up here that we're currently above. We broke out above the weekly kickoff in the NASDAQ yesterday, adding 3,100 contracts in open interest. There was a negative delta divergence as well. Open interest, that increase above that level is telling us, there's new buying, new business coming into this market. As long as volume and open interest hold up, it looks like the upside auction is doing exceedingly well right now. Are we going to end up getting too long? I don't know. Again, we have a late spike here as well. The base of the late spike right here is 11,454. We may not get the chance to see that in regular trading hour session because, again, the late spike, upside nuance if we open above it. The gap, if we can't close it, upside nuance. Very similar to what we did yesterday. Look at the overnight. We just barreled down to the almost exact low from yesterday. And again, I'm going to be trading what I see today. It's the only thing I can do. I'm going to try not to have any kind of bias. Where's the 30? There it is. So there, and the TPO chart now. Okay, there's our late spike. Obviously, with high probability, we're going to open above it. The base of the late spike is where this breaks. In my opinion, it's one of the things that could break the structure that we're hoping to keep to the upside today. March daily. Let me see this. We're going to jump into the gold here as soon as I check this. March daily. It's not catching up for me. All right, let's take a look at gold. So gold heading towards weekly kickoff high, 1911. $1,900 for gold now. Rick, I hope you're still long. Yesterday, I think we gave this kind of a B minus for performance to the upside. Yesterday, we added another 4,100 contracts on higher volume, a little bit of a pullback, an outside day in extended trading hours, but the upside structure remains good. US dollar is back to June, even May 2022 levels right now, and that's got gold heading to the upside. I'm looking forward to seeing what the euro is doing as well. Take a look at the 30-minute chart. Wow, nice knee jerking around, of course, but here we are. We are holding above range. We've broken out above this range. This is going to be a tough trading day. It's going to be, I think, very difficult for us to find good trade location in gold today unless we get a good look up at 1911, which is weekly kickoff high. That might be an opportunity for us to, at the very least, limit the risk. That's the goal here, right? As always, about limiting the risk. Here's the euro. Again, you're looking at the resistant weekly kickoff high, now supportive right to it and continuing to the upside. So we're this digestion here has now broken into upside continuation. Now we added 0 as far as open interest yesterday. Nada. No change in open interest yesterday, but I'll bet you there's going to be a change today. This morning, before the numbers came out, there was no real overnight inventory. You keep your eye on the dollar. If the dollar continues to be under pressure, look for opportunities to buy gold and the euro. Yesterday on the TPO chart here, no initial balance high or low extreme. Look at this. Pow. And now seeing some continuation to the upside. Here's the 10-year. Also, with rates coming down this morning, of course, the 10-year is going to finally accept above weekly kickoff high and find some directional activity. Volume was pretty slow for the past 3 days while we just kind of digested this area. We did add 23,000 in open interest on this push up towards weekly kickoff high. I think we're going to probably see higher volume and a nice increase in open interest on this push above this. If not, then this rally above this weekly kickoff level will feel hollow. We'll see that tomorrow morning in the open interest information. Take a look at the 30. So very even bell curve yesterday. It's right in my notes here before the open. This symmetrical bell curve that we have in the volume and TPO charts indicates that this market is really ready to make a move away from this area to find new levels to facilitate trade. When we think about a market, its job is to facilitate trade. It used it up yesterday. Take a look at this. See how symmetrical? Week high, week low, symmetrical bell curve. The market is preparing to move to another area to seek the level where two-sided trade can trade the most. Well, it's seeking that now above weekly kickoff high. Here's the Nat gas. Did we find some buyers yesterday? We have some pretty decent volume down here. We added 8,100 in open interest. It's kind of hard to see in the 30-minute chart which side really brought in the more volume. Was it on the way down or on the way back up? Right now, this market is looking to continue this move off this low. Is this going to end up being a reversal down here? Take a look at the 30. Big drop, pull back. Where did the money come in? Was it the buyers that came in? I'm going to go with yes, because we had negative delta at the end of the day yesterday. So that negative delta just stopped here, and buyers came in. Short time frame sellers continued to push delta or hold delta lower, makes sense to me. We've got a gap to the upside. We haven't been able to close that gap. I'm looking for a move to this trend line up here, almost similar to crude. Let's go back and see how that open and crude played out for us, if anything. So right now, the high of the session is the opening range. The opening range is 78.85 to 79.09. So what is that? About 85, 25 points, 25 ticks of risk. Not really seeing a big pushback off this opening range trade, but it is right up against that trend line here on the 30. That lets us limit risk. I'm going to be fascinated to see how this plays out. We may check that time once in a while we're in Make Hogue Money. All right, Rick, I'm glad you are still long that gold. That's it's going to be a nice trade for you. Backer Salt, and I'm glad you made some of the profits back. Some of the money you lost yesterday. That's a great, of course. Hope is restored. Sonny's got a quote here I missed. Good morning, Hagel Matters. Fries. Good morning, Anissa. It's not about how hard you hit. It's about It's about how hard you can get hit and keep moving forward. Rocky Balboa. Hey, Adrian, you look like a real heartbreaker today. Rocky Balboa. Yeah, it's a good quote. Similar to Mike Tyson's quote, everybody's got a plan till they get punched in the nose. Right? Salt Bones, what's up? How are you? All right. Let's take our deep breath, be ready for trading. I'll see you all in Make Hogue Money should you choose to join me. Again, I'm going to just wait for instructions and Make Hogue Money. Let's see if you can make me some money on a day like today. I'm betting you can. Take your deep breath. Stay humble, grateful, and creative in your trading today. Happy Thursday, everyone. I'm looking forward to seeing everybody back, Make Hogue Money and tomorrow morning on the market prep, and we'll see you in a few minutes. If I don't, trade well. Have a great day.